So good morning. Thank you for joining us, and yeah, it's a pleasure to be here. Um, Aspermont is converting nearly 2 centuries of specialist media heritage into a subscriptions-first platform, and increasingly a scalable data and intelligence business. Our goal is constant: help the global mining ecosystem make better, faster decisions. We are focused on disciplined execution, growing high-quality recurring revenue while commercializing our proprietary content and data for long-term value. Aspermont leads business-to-business media for the resource sectors. We serve thousands of corporate subscriptions in more than 150 countries, with an engaged 3 million digital user audience. Subscriptions have delivered sustained double-digit growth in ARR and ARPU, compounding alongside a 100% net retention rate, evidence that our content, utility, and pricing resonate. Aspermont's clients span the value chain, from miners and OEMs to finance, legal, government, and technology. More than a quarter of the global Fortune 100 engage with our products and services. That breadth gives us multi-stakeholder insight, fast feedback for product development, and distribution for new offerings, reinforcing our role as a trusted, independent source of record. The business track record is consistent. 9 years of annual recurring revenue growth with a 100% net retention rate and sustained double-digit average revenue per unit compounding. Customers stay, usage deepens, and value per account rises as we refine packaging and experience. This subscriptions growth infrastructure is the platform for scaling our new data and intelligence business. For continuing operations in FY25, revenue was $15.4 million and adjusted earnings was negative $1 million, reflecting planned investment in our data and intelligence teams and the Skywave data platform. A change in software capitalization policy resulted in a one-off write-down as we further aligned spend with operations. We are maintaining a robust subscriptions core while funding the capabilities that will drive the next phase of our growth. Financial year 25 marked an inflection point. Annual recurring revenue closed at $11.5 million, up 2% year on year, extending our 37th consecutive quarter of growth run in subscriptions. We launched our new data platform, Mining IQ, at the end of the year, with early demand including pre-sales to tier 1 miners and financial institutions. We signed an enterprise agreement with Rio Tinto for $550,000 to partner on the digitalization of our extensive print archives. And we also announced the development of a large language model powered platform, validating both our proprietary content and enterprise customers' appetite for Aspermont built data products. Nexus, our in-house marketing agency, secured flagship mandates. The Future of Mining Australia delivered a record audience. Recurring subscription-based total revenue mix increased, and second half operating cash flows were positive. The $2.8 million of funds brought into the business via our placements and share purchase plan are helping to accelerate execution now. FY25 was defined by the successful validation of several high-impact pilots and proof of concepts. Momentum continued in the first quarter of FY26. Revenue at $3.5 million, with subscriptions now more than 70% of the total mix. Normalized earnings reflects disciplined investment, and we ended with a solid net cash position. We added further references, including a Nexus partnership with Timor-Leste, and welcomed a new chairman to deepen governance and capital markets capabilities. Against both prior year and the preceding quarter, like for like, revenue was steady, subscriptions remained resilient, and cash and costs were well managed. This quarterly cadence shows consistency and transparency, while commercial teams focus on converting Mining IQ proof points into recurring enterprise ARR. In summary, Aspermont is a 9-year-old content as a service model built on an 190-year legacy. We have an aligned, experienced team, a strong subscriptions engine with levers to grow volume and ARPU, and we have new vectors, Nexus and data and intelligence, both now validated by major clients. With capital in place, our job is sequencing. Expand corporate subscriptions, lift ARPU via packaging and account-based marketing, and scale data revenues from pilots into enterprise contracts. The industry faces information overload, but requires timely, accurate, objective insight. Our integrated content as a service stack, paywall content, expert journalists, analysts, and global distribution, preserves quality and economics while building recurring revenue. Crucially, it now feeds our data strategy with trusted, structured inputs. Editorial excellence is a strategic input into data quality. Focusing on building additional growth in mining corporate subscriptions and developing must-have data and intelligence products are the cornerstones of our long-term growth strategy. In mining corporate subscriptions, the total addressable market includes 80,000 corporates, where we currently serve 4,000 today. So there is ample headroom for volume growth. ARPU is more than 2,500, but with some cohorts now paying more than $100,000 per annual subscription. This shows a willingness to pay for premium value. We'll keep improving products and UX, sharpen account-based marketing, and expand by geography, language, and product, while steadily lifting ARPU through packaging and rate card discipline. In data and intelligence, our revenue stream started in 2020 and is now complemented by the launch of Mining IQ. As mentioned, early pre-sales with tier 1 miners and financial institutions confirms the use case and demonstrates enterprise readiness for trusted proprietary data solutions. We will sequence features and modules to drive recurring monetization. We build in 3 phases. Foundation, ingest and structure our corpus with ontology and governance. Productization, roll out the mining project pipeline and supplier-side data and intelligence products. And scale, predictive models, indices, benchmarks, and enterprise decision-making tools. Capital converts proprietary data into high-margin recurring revenues. Human expertise remains in the loop to manage quality, enhancements, and risk. For Aspermont, now is the time to scale. Mining IQ is live, enterprise validation is in place, our subscriptions base is resilient, capital is in place, and the macro backdrop is constructive. A note on artificial intelligence. Like technology, AI is an accelerator, not the moat. The moat is our proprietary, rights-controlled content and data curated for over 190 years, all of it behind a paywall, now being digitalized and commercialized as a scalable data asset. With a strong core, client endorsements, and a clear roadmap, we will convert pilots into recurring enterprise ARR, keep lifting ARPU, and show operating leverage as data revenues scale. It is an exciting time for the company, and thank you for listening to the presentation thus far today.
Thank you so much, Alex. Everyone is welcome to post questions to the chat, but I've also some prepared. So you've said you've transformed from a specialist publisher to more of a data-led intelligence platform. So how would you characterize the companies today versus 3 years ago? Can you describe the transformation process?
Yeah, I'll take it back a bit further, actually. I would say Aspermont is we're in the fourth revolution. We're a 200-year-old business, which for 180 years or so was in print publishing. We transitioned from print publishing into a digital media business in 2000, 2001. Aspermont put up paywall content in 2001 at the birth of the internet, at a time when everyone said, the internet was free, content was free, and it was all about high volume traffic and advertising revenue solutions. Aspermont's third transition was to move the revenue mix of its business from print advertising and live events to one that was dominated by a SaaS business, content as a service business. That was the third revolution, from digital media into a SaaS business. And as I said earlier, now 70% of the mix of our revenues is in recurring subscription-based income. And it's now that we stand at the forefront of our fourth revolution, which is moving into a data and intelligence business. We have the data and intelligence assets, we have the proprietary content, we have the validation and the funds in place from our transaction with Rio Tinto. And this year we are in the midst of building our large language model platform, essentially ChatGPT for the mining sector, but then also the data and intelligence products that will sit above that. So we're on that transitional point now of SaaS moving into data and intelligence. But of course, we're not leaving the principles of SaaS behind. That subscriptions engine infrastructure that has delivered 37 consecutive quarters of growth is the fundamental architecture upon which the commercial models for our data and intelligence business will be built.
And then there's a question from the chat. Can you shortly talk about the share consolidation that you decided at the AGM? When will it take place, and at what terms?
Yes, we have considered share consolidation for a number of years. I would say it's one of the last legacy items of the old Aspermont. The old Aspermont, in many respects, died or transformed about 10 years ago, and probably the large amount of shares that we've had on issue has been an eyesore, particularly in its reflection in the share price. So the board, armed with a new chairman who joined us in January, resolved to a 250-to-1 rollback, which will take effect, I believe, on the initial, I think it's on the 3rd or the 4th of March. So in the next few days.
And I've read that you want to move up the value curve. What does it actually mean in practical terms for your customers?
When you say move up the value curve, you mean in terms of the monetization of our existing customers?
Yeah.
Um, Look, we had a pretty democratic approach to subscriptions growth over the last 20 years or so. We treated every subscriptions cohort the same with the same level of importance. Um, but about 2 years ago, we actually started to break it down into cohorts and have a look at which cohorts of our subscribers were compounding growth and showing different characteristics to others. And financial institutions and the largest mining companies and mid-tier mining companies were in a far more exorbitant growth path than our others. So in the last 18 months, we have decided to focus the development of our product offerings to give our key client base the data and intelligence tools that they need. We're very close to our clients. We speak to them a lot, and we understand what data platforms they use at the moment, where the inadequacies are, where those gaps are, and where we might be able to build products and solutions for them that will become vital parts of their decision-making tools and therefore get into the blood flow. So if I go back to 2016, the most expensive subscription we had in Aspermont in 2016 was $8,000. It was a top three mining company that paid $8,000 for its subscription. That same company this year paid $210,000 for its subscription. So that's what we mean by moving up the value chain. We've moved up the value chain so far in terms of the dissemination of the existing premium and standard products, news, information, research. And as those data and intelligence products come in and they become more bespoke and focused to specific persona and roles within inside of our largest client bases, the cohorts will be smaller, but the value will be a lot higher.
Okay. And more questions from the chat is currently we're in a good time of the resource cycle, so everyone's happy with the current gold price. It might even go higher. Do you realize more or better business now that the resource cycle is going up?
Aspermont has delivered 37 consecutive quarters of growth. And other than the last 2 quarters, I don't think many of those other 37 quarters have been characterized as particularly good climatic conditions for the mining sector. So information, data, and intelligence are critical in all parts of the cycle. So on that side of the business, we have a counter-cyclical offering. We have a resilient cyclical offering. Where we are positively leveraged to the upside, of course, is in terms of things like our in-house marketing agency, Nexus. When companies, countries, and others want to come out and be forthright in their marketing communication in the marketplace, we're obviously well suited to achieve up curves on that. And we stated in a note to our Q1 accounts the other day that we are expecting to report significant upside in our Q2 revenue position.
Yeah, so
Initially,
the subscription revenue is very steady, increasingly, but you also talked shortly about the RPU, which also was increased. What are the structural drivers behind that uplift?
Nish, I don't know if you want to jump in on any of these.
Yeah, sure. I mean, I'll just expand on sort of will we see some benefit from sort of the optimism and that's in the resources market at the moment. Obviously, with our focus on both mining finance as well as the operational side, generally marketing budgets and the need to promote and raise monies as miners or junior miners start looking for more investment opportunity grows as more money is coming into the market. There is a real need across a whole set of portfolios for that to happen. So generally, there's a lead time as more and more of that sort of starts coming through. So we would expect more marketing dollars available, as Alex alludes, particularly with companies bringing their offerings or their investment needs to the market. And we should expect to see that benefit coming through as the resources sector starts sort of driving some of those investment plans over the next few years. Sorry, I didn't catch the second question. If you can just repeat that for me.
It was basically what are the structural drivers behind the uplift of the RPU?
So within that one, there's three elements. Account-based marketing. So we count BHP as one subscription, right? But 10 people attached to it, 100 people attached to it, 1,000 people attached to it, multiple seats, account-based marketing with inside an account like that help expand the value of it. Secondly, cross-sales ratio. So as we launch more products and services, be they research, intelligence, or data, obviously we have more high value products to sell with inside of those accounts. And then rate card increasing. We have a standard 5 to 6% rate card increase every single year on our subscriptions, regardless.
Okay, and looking at that, how much headroom do you believe remains within those existing corporate subscribers to further expand the RPU?
I would say we've in terms of our existing product offerings, we're probably about 15% penetrated, but since we're launching new products and services every day and we're moving into higher data and intelligence products, actually the opportunity is expanding pretty quickly. We wanted to get to a situation of having, I mean, right now we've got 4,000 clients paying $2,500 of ARPU, equals $11.5 million of ARR. We reckon there's at least 10 clients out there that should be spending at least $1 million with us on our products and services, and that's $10 million of ARR, let alone all of the others in the mining ecosystem. So yeah, we've still got a very long growth trajectory.
Okay, and looking at the chat again, there's a question. We saw each other at the mining in Darba. Can you talk a bit about the outcomes there? You were really busy there.
Who's the question from? Who did I see?
It's from Manuel.
From who, sorry?
From Manuel Hölzler.
Okay. Hey, Manuel. Yes, I'm sorry we didn't get a chance to speak, actually. I think we ended up having about 80 meetings in the space of 3 days. It was it was an excellent event. Primarily in that event, we were spending time with some of our largest customers talking about data and intelligence needs. So some of the largest mining companies, guys that we know, senior management teams and the rest of it who were there, just talking, because each of the different large miners have got slightly different angles on how they're attacking the market opportunities at the moment. But primarily, I would say our focus was with central governments and with some of the large OEMs, particularly around Nexus. Nexus is going to be a really dynamic growth opportunity within inside of our business. I can say that we've already surpassed the whole of last year's Nexus revenue within inside the first quarter of this year. So there's going to be a very high level of growth. We're very confident of a very high level of growth coming through in Nexus this year. It's definitely got a dynamic leverage to it.
Okay. And yeah, Mining IQ is also positioned for like strategic inflection right now. Can you explain what problem does it solve that traditional publishing cannot?
So there'll be lots of products that come on to Mining IQ, but I'll give you an idea of one. Right now we look at, and this is relevant because there's a lots of junior mining companies who are going to be here at IIF. We look at the 700 mining companies that are somewhere between 3 years out from going into production, that are not in production but have got an economic study. We rank every single one of those projects in 24 different criteria, and we have an overall ranking score for them based on an algorithm that we update and we expose to the market on an annual basis. That's a product that's already been subscribed to by the largest mining companies in the world and some of the largest financial institutions in the world. We are going to expand that product to cover every single mining project in the marketplace, from pre-exploration, exploration, into production, port and to closure. And by doing that alone, we are going to be able to give the market an end-to-end view of the supply chain of every single commodity coming online over the next few years. That will enable us to step up and move into things like benchmark pricing and analytics. The reason why we can do that as well is because with the 200 years worth of exploration data that we've got, that we're going to ingest into our large language model, that sits at the foundation of all those projects underneath it. And then all of the other work we've already started on top is the second layer. And then we get into the pricing on top of that. So that is, we are hoping will be a very disruptive data product for the market. But it will take.
So you already won some tier one clients for that. But what are the key milestones investors should watch as Mining IQ transitions from validation to scalable deployment?
So we have targeted the completion of our full data and intelligence planning as a business is the 31st of March. So we've got a number of other products that we are looking to build as well. And then in terms of the launch of our LLM platform in its first version with Mining IQ, that'll be before the end of the financial year.
Okay. And how do you balance this continued investment in data capability with a pathway to sustained profitability?
Generation of free cash flow from a high margin subscriptions business. So growth speed is always affected by capital availability and operational capacity. So at the moment we work with inside of our resources. We've given guidance to the market that we're cash flow positive from the third quarter of this year. We were cash flow positive in the second half of last year. And that's the platform in which we'll move on at this point in time.
Okay, and how should we think about the long-term margin profile of the business in total?
Nish, do you want to answer that question? Probably one for you. Long-term margin profile of the business.
Sure. I mean, the digital side of the business, particularly the subscription side of the business, is very scalable. So the operating leverage there is significant as we start scaling up. We currently operate around about 55 to 60% gross margin in these areas. And I would expect as the scaling effect starts taking place, that will improve to over 70% as the subscriptions business scales up. The data business, obviously, in its infancy, will dilute some of those margins as we sort of bring products out to market. But we expect that to sort of be over an 18-month cycle as we bring new products to the market, while also undertaking investments. And so I expect over the next sort of 18 months to 2 years, the margins will be slightly more subdued. They're still improving, but the margins will be slightly more subdued just because of the investment program and the new products that we bring to market, which will not be fully mature. But that should then start scaling up as products get to maturity.
And I think just to add to that, as part of the change of our software capitalization policy that you can see in our annual accounts this year, we are running all of our investment through OPEX pretty much. There's not much that's held out from a CapEx perspective. So it's a fully loaded P&L.
Okay. So, and now with 30 seconds remaining, maybe you can talk quickly about how would Aspermont look 5 years ahead, and why is now the right time to invest in Aspermont?
Now is the right time because this business has sat on a treasure trove of proprietary content for the last 200 years that is finally enabled by the advent of large language models, machine learning and AI and the rest of it in order to actually produce it into a highly valuable tool. Lots of other tools out there absorb lots of other information around on the web and produce question and answer type sort of solutions and data intelligence products, but they don't have the brand equity that a company like Aspermont has, or the proprietary data. And as I said at the end of my speech, it is not AI that is the differentiator. And the same way 10 years ago, it was not technology. Those are simply enablers. It is proprietary content, and no one globally in the mining sector has the level of proprietary content that Aspermont has. So if you're positive on a global mining boom, and I imagine most people today will be, Aspermont's about as well positioned as it possibly could be, with a team in place, with capital in place, with infrastructure, and with a subscriptions engine that's demonstrated for 37 consecutive quarters that it can perform.
Alex, thank you so much. Great closing words.
Thanks, guys. Thanks for the opportunity.